Hello, I'm Mike Graham, president of Midwestern Securities. Welcome to this episode of Banking on Growth. With us today is Schutt, our vice president of business development. We're doing something a little bit different with this episode and allowing you to get to know our team a little bit more. Ann is new with Midwestern Securities, so we're excited to have her with us on the podcast today. Ann, welcome.
Thanks, Mike. I'm super excited to be here. Thanks for hosting me.
Yeah, we're thankful to have you on the team and excited to have you on the podcast as well. You have a very successful and diverse professional background. Will you share a little bit about your background and what brought you to this point in your career with Midwestern Securities?
Sure. Let's just say I haven't really had the straight line to this position in my career. From Midwest, born and raised here in the Peoria area, and went to Illinois State University. So Illinois State University was the start, got a degree in marketing, and right out of college, I got hired by a big Fortune 500 company that makes big yellow tractors, Caterpillar, got recruited into their marketing training program. And that actually took me through a process where I tore apart and put together diesel engines, and I learned about tractors, and I drove all sorts of really cool equipment. That took me up to Canada. I was a manager for them for their truck engine parts business based in Toronto, and I covered all of Canada. And I said, as a 23 at the time, year old girl, I was homesick for the Midwest, right? I was homesick. I was traveling all the time. And I said, I think I want to go back. Great company, but I decided I'm going to move back. I did a stint with an engineering firm. And then I transitioned actually into the pharmaceutical and biotech industry. And that's where I spent about 18 years, 2 different companies, all sorts of positions from sales to training to leadership. And just really enjoyed that just because of all the science and learning. And I'm a very curious person. So it really was a great place for me for a long time. Well, then I started to get curious and interested in finance. I just started, absorbing as much as I could, podcasts and books, and just really reading articles. And I met with a financial advisor. And he said, you're better at this than many financial advisors I know. Why don't you do this? No, there's no way. I'm 40 plus. There's no way I could leave a career that I've had for almost 20 years and completely switch. It took some convincing, but then I said, you know what? Actually, yes, life's too short. And so I made that transition, and I spent about 4 years working for a planning team, a firm that was part of a great big broker dealer, but doing comprehensive planning mostly for Fortune 500 executives. And then one day I got a call from this guy named Mike Graham from Midwestern Securities. And we had a mutual connection at a community bank. And I was recommended to him. And we just started a conversation. And it was just a great conversation. And it just piqued my interest into the community banking world, and that there's, a greater impact that can be made. And so that's what led me to move away from the kind of frontline financial advisory to the position I'm in now. I live in Peoria. I have a son who is a sophomore in college at Western Illinois University, and 2 spoiled rescue dogs. So that's how I spend my free time.
Yeah, that's great. That's great. What a great story, and it's a very successful career path. We're thankful to have you on the team. Tell us a little bit about the transition, though, going from client-facing frontline financial advisor to working in a bigger picture role supporting community financial institutions. What intrigued you about that change?
Yeah, that's a great question. So I got into finance in general because I wanted to help people. I wanted to make a difference. I was very good with numbers, and I was very blessed to have a family and a father that taught me well and really set me on the right track from a young age. But so many people don't have that ability. And as I was doing it on a daily basis with clients, I really found that to be really rewarding. And so when you and I sat down and you started talking to me about what Midwestern does and how you really help it from a higher level to really have a greater impact by helping develop these retail wealth management programs inside community banks, I thought, wow, what a great way to continue to be involved with finance and planning and impacting people's lives, but with a greater impact, right? Like every day I can impact more people with what I'm doing through Midwestern Securities than just individually meeting with people on my own. And so that really drew me into, you know what, I love the mission and I want to be a part of that so that we can really make an impact to a greater degree in our communities.
Absolutely. And, impact is very important to us. We believe what we're doing improves those lives around us. So we call, of all stakeholders, our retail financial planning customers, our employees, our financial advisors, our community bank leadership, their shareholders, and their communities in general, creating healthier communities in the Midwest where all of our branches currently are. You have a unique perspective, though, being client-facing and competing with retail financial planners inside of community banks. Will you touch on that a little bit?
Yeah, so it is an interesting perspective because I was I was the enemy, right? I was the one that was, pulling the money away from the banks because, I wanted them to invest with me. I wanted them to be part of our portfolio. And so the way that I would look at it from my business perspective was, I pictured it kind of like my business was like a bucket of water, right? It's a bucket of water. And every time they connect with somebody else, an insurance person, their banker, whoever, an accountant, an estate attorney, if I didn't know them and they weren't part of my referral network, there's a potential that they could shoot a hole in that bucket and drain out some of that business. And so really, I kind of look at it that's as an outside investment advisor, that's what they're doing every day to our community banks. And if our community banks are not protecting that bucket, right, and having their own strong financial services and wealth management division, then you've got all these competing forces coming in trying to shoot holes in that bucket and drain out that money from their bank. We want money to be sticky, right? We want it to stay in the bank. But if we're not offering what the clients need and what the community needs, then there's lots of people lined up ready to take a shot at it and take some of that away. And so that's what I did, right? That was what I did for many years. And, it doesn't have to be that way. If a bank has a really good financial services, retail wealth management program, they can keep that money in their community and in their bank.
Absolutely. Yeah, they have a unique advantage. They have the relationship with the family, right? Often those relationships are multi-generation relationships. They have other business lines with those people already, their mortgage, their checking account, savings account, maybe a CD, maybe a small business loan, a farm loan, et cetera. If a community bank is on their toes, they can maximize the relationship, the entire household, as in the industry, we refer to it as the entire wallet. Instead, if they don't, they're allowing customers to go elsewhere to get those other financial services needs taken care of that the banks aren't providing for them, forcing them basically to shop with their competitors. It's interesting. I believe, it's been a while since I saw the statistic, but Wells Fargo had 8.2 products per household. So that means mortgage, checking, savings, car loan, perhaps Roth IRA, 529, college savings, et cetera. 8.2 products per household, and the average community bank has 2 products per household. So when it comes time to win that relationship, who's going to win? It's that party that has eight products per household versus the product that has 2. And community bankers can say, well, but we knew your grandfather. Well, that's not enough to retain the business with the next generation, right? The next generation, last year was unique with interest rates coming up and people moving money into CDs, things like that. But that hasn't happened for 14 years, really, 13 or 14 years before, the rates have been super low. And the generation of, Gen Xers and younger don't get together and talk about their CD rates. Maybe there's an anomaly after 2023 that happens once in a while, but they typically, if they're on the golf course or at a Christmas party, they're talking about their mutual funds and their 401ks, not their CDs. So if community banks want to continue to be relevant, they can't just cling to the prior relationships. Yes, those are very important, and they're springboards into new relationships, but they have to have those springboards in, plus the products, services, technology, ways to visit their money that the generations that are in their peak earning years and soon to be inheriting transfers of wealth need, want, desire. So, you saw it as community banks that didn't have, successful, engaged, attentive wealth management divisions. You saw them, probably like a lot of financial advisors do, as being vulnerable, easy to address the needs that the community bank isn't providing. And I don't know if your prior firm did this, but most firms also offer, most wealth management firms, brokerage firms, also offer FDIC accounts, also offer lending, also offer debit cards, check writing, et cetera, right? So again, back to my comment that if community banks aren't doing this, that they're leaving their relationships very vulnerable.
Mm-hmm. And they need to be the first thought, right? So, I think of, clients that I would have, the executives that have maybe, stock options or, restricted stock that's vesting and they're looking to do something with it. They weren't going to put it in the cash in the bank, right? Like they want to diversify away from the one company, but they don't want to just put it in a bank, into a CD or into cash. They want it to work for them. And so, knowing your customers, and banks have access, right? You have knowledge, your community, who's working for what company and what bank transactions are coming in. And you can really embrace that to build that community with your financial planner that's in your bank, to really provide a nice kind of financial house for your community.
Community banks have momentum, they have relationships, but they have to be proactive. They have to be intentional about winning, surviving, providing more than 2 products per household. If they do make that mental step, they have huge advantages. But if they don't, they're very vulnerable. They can be vulnerable competitors if they're living off yesteryear's needs, services. They need to be meeting the customers where the customers are today. This has been a while ago, but both being from Central Illinois, this is probably 30 years ago, 25 to 30 years ago, there was 2 large financial institutions in the Peoria market. One had hundreds of employees, and one had dozens of employees. Okay. The one with dozens of employees ran a full-page ad in the Peoria Journal-Star claiming to be the biggest financial institution in Central Illinois. Okay. Dozens of employees versus hundreds. The entity with hundreds of employees didn't like the full-page ad right, in their face. And so they challenged and they called the branch manager at the one with the dozens and said, you guys better retract and make a public statement that you're not the biggest financial institution in the Peoria market. We are. The branch manager of the brokerage firm, a place like you used to work, those numbers that you guys publish with your regulator are accurate, aren't they? And this firm said, of course they are, otherwise we wouldn't publish them. And the branch manager of the wealth management firm said, well, we're not retracting anything. We have more assets under management than you guys have assets as an institution. So I think a lot of times financial banks and credit unions as well underestimate where their clients, where their customers, members' wealth really is and how much wealth is out there. And they think that they have that. Did you experience any of that in your prior life?
Oh, absolutely. Absolutely. I think it's just really understanding that you can't judge a book by its cover, right? Like, I think that that's the biggest mistake that people make is, thinking that, oh, well, because we have this big presence, like we're going to be the one that dominates and we're going to be the one that does the best job for clients and we're getting all the good clients. And that's not necessarily the right attitude. I mean, we have banks that we work with that have more in assets under management than they have in assets, right? Little small towns that you would never think. But you know what? People that are part of a community, when you are a community bank and you build out your program and you become that financial house and you offer that solution for your community, you're the ones that are supporting them. You're the ones that are supporting the Little League and in the community, and they want to give you the business. If you offer them what they need, they want to give you that business. And we've seen it time and time again with community banks. And it's not necessarily the great big one, right? The one that has the big billboards and is on all the Super Bowl commercials or whatever, that's necessarily going to do the best job for the community. And we see that, with our business as well, right? We're not the biggest broker dealer out there. But you know what? We've got systems in place and we have formulas that can help really optimize these banks and get their programs where they need to be, where they want them to be. And it doesn't matter how big you are. Like you said, the dozens versus the hundreds, thousands, sometimes employees, that doesn't matter. It's what's at the core of it and what you truly are doing on a daily basis to help your community and to help your clients.
Absolutely. So community financial institutions can win if they choose to and partner with the right people and commit to it. Part of building this triangular relationship, partnering with the right broker dealer that can help guide them through the regulatory elements, the business building elements, but also the recruiting. Can you speak to what banks should look for in a financial advisor and why a financial advisor would find working in a community bank as a more attractive place to be?
Absolutely. So let's kind of start first with who makes a good financial advisor. I think that I hear too often, well, we want the unicorn, right? We want to hire the person that is the CFP, that's Series 7 license, that comes with $50 million worth of assets and just drops right into our bank. Maybe that can happen, but not probable, right? I think of back my history, right? So I had no history as a financial advisor whatsoever, but I had a history in professional sales. So I know how to work with people. I know how to sell. And so it was a great transition. I could learn the investment side. I could learn the planning. There's so many resources, and with the right training support, like what we give to our financial advisors, you can get someone up and running and be very successful. And so really, I encourage people to not just have that kind of blinders on to say, I only want someone that's already a financial advisor. I only want them to come in if they already have assets. Now, getting them up and running and profitable might take a little bit longer, but if you're investing in them and they're truly talented with people and with selling, it's going to be a great investment of time and effort to get them in and get them stable and get them going. Now, what I love about the financial advisor in the bank role is, when I started in this, it was pre-COVID, where you could actually sit across the table from people and have great conversations, because I'd much rather meet with someone in person. But then COVID hit. And now so often your interactions with clients are just virtual. It's just a virtual interaction. Even if their office is down the street, it's very convenient. They just want to work virtually. Community banks, while there is some of that, obviously, there's always going to be the ability to work virtually if you need to accommodate a client, but you can really build a clientele that you can have in. You can share a cup of coffee together. You can talk about goals. You can really, truly get to know them in the bank setting where they're comfortable and where they trust, right? There's already a level of trust being part of that bank in their community. And then also being part of a team. So many financial advisors are on their own out there. They don't have administrative support. They don't have a team. And when you are a sales, when you're really a people person and you enjoy the selling process and the helping people connect and find solutions, which is what sales is, then you want to have interactions with people. You want to have a team. And when you have a team culture in a bank where the tellers, the loan officers, the trust officers, the president, everybody's working on the same team and you're all working towards the same goal of strengthening that bank, what a rewarding place to be rather than just kind of on your own. Okay, now I'm licensed and I'm out here and I'm trying to do this and I'm trying to cold call all these people versus now I'm part of a team and this team is going to give me some warm introductions. They want me to connect with their customers because we want to keep their money in our community. What an amazing work environment compared to what so many financial advisors are doing out there.
The warmth and the barriers that often come down just by you being affiliated with that financial institution that's been in that community, a trusted institution for decades, if not centuries. We've got partners that have been in banking for 120 years. So again, I agree. It's a great place to be. If I was starting today as a financial advisor, I would not look for a wirehouse, a Merrill Lynch, a Morgan Stanley, an Edward Jones. I wouldn't look to affiliate with an independent broker dealer and just hang a shingle. I would try to partner with a community bank. That's where the money, that's where the relationships are. You stand out as a star in that community and the people are paid to help you be successful. That's a great point, talking about the advantages of being a financial advisor in a community bank. Thanks for sharing them. What's been one of the most surprising things that you've experienced about retail wealth management divisions inside of community financial institutions?
Yeah, I mean, it's been fascinating really doing a deep dive and learning about the inner workings of this. And I had no idea the differences in the services that are provided by broker dealers to community banks. Recently, we had a bank that they shared with us that they are working with one of the big wirehouses, and they've been working with them for 20 years. And nobody from that company has walked in their door in 20 years. And to me, like, that's just blows my mind. I mean, if I can't even think of how many millions of dollars they're giving to this company on a yearly basis, and they're not even coming in and shaking their hand and wanting feedback and working with them hand in hand, amazes me. Recruiting, right? So succession planning for banks. When it comes to, you have a financial services program, you've got your retail wealth management, your financial advisor, you've got in place, they're doing great, but nobody's helping you think through, okay, now once they get to a certain level of assets, we need to start thinking about bringing on a second one. Or we need to have that succession plan if you've got someone that's nearing retirement, right? Like we don't want to just be like, oh, boom, now we don't have a financial advisor, because now that's going to put your whole program at risk. Supervisory. I was shocked to learn that a lot of these community banks are paying huge amounts of money, somewhere around $10,000 a year, to be their own office of supervisory jurisdiction, their own OSJ. So not only are they paying, but they're having to keep up with all of the changing regulatory environment that's within financial services. It blows my mind. That's something that the broker dealer should provide. They should provide the help, right? They should provide the training. They should provide the recruiting help. They should provide the compliance help, marketing. You know, why wouldn't a broker dealer help marketing for that bank? I mean, some banks aren't even allowed to brand their financial services, their wealth management program, with their own branding. It has blown my mind to see just the differences in what kind of a smaller, more niche, white glove approach broker dealer like ours is versus some of the big ones that I think have just gotten overconfident in the years and just think, you know what, we've got the business, we're not having to invest anything back in it, and they're sending us millions of dollars every year. So why would we do it differently?
Yeah, interesting. So the lack of leadership, the lack of communication from the big broker dealers, to paraphrase you, is evidence of complacency, a lack of caring potentially. Yeah, I agree. I think that It's the same thing that allows community banks to differentiate themselves from the online banks and the big publicly traded banks. The ability to be involved and to care about the customer and be close to the customer. I think a lot of this boils down to unexercised power of community financial institutions. If community financial institutions wanted to dominate, they could. They have to decide that they want to. They have to partner with the right people that can provide that communication and leadership, and chart a course and hold people accountable to complete those goals. If they do that, the big publicly traded companies that aren't as close to the customer as we are, the community banks are, the bigger, the further they are from the customer, the more likely they are to lose. Community banks have unexercised power.
Yeah. And they have the ability to plug those holes, right? They've got their bucket. They've got the ability to plug the holes so that they can fill all those needs of their community. Investments, insurance, tax, whatever it might be. They have the ability to do that to a greater degree than many of those big, huge investment firms and big, huge companies do. They're not able to diversify what they offer their clients nearly as much as a community bank can. And it really is, like you said, unexercised power to be able to, like I said, really be that financial home for the community.
As you're meeting with community banks, what are some of the things that you look for to determine if it would be a good partnership between our firm and community financial institutions?
Yeah, I think it's, it goes without saying, there are thousands of banks out there. Not everybody's going to be the right partner, right? We truly partner with our banks. And what that means is that we want to make sure that it's kind of a two-way street. So, we're not miracle workers. We can't come in and say, your program's got some challenges and we're going to come fix it all. Like, just get out of the way and let us fix it. Because that doesn't work, right? So we go in, we help assess, and the main things we look for are, do they already have a retail wealth management program? Let's face it, if they don't already have that ball rolling, it's going to be tough, right, to compete. Do you already have a wealth management program? Are you willing to truly partner? Are you willing to make sure that advisor, whether they're existing or we need to hire and get one in there, is truly part of the bank's team? We want them to be a team member. We want them to be, part of the privacy policy so that information can be shared with them. We want referrals to be given because, referrals will also flow back. That financial advisor is going to have such deep conversations with your community clients that they're going to also uncover things. And if we've got a really good team approach, referrals coming in from the bank side and referrals are going to come back out from the financial services side. Those are things that we look for. And then, sometimes it comes around performance. If they're really not performing at the level that maybe some of our big partners are performing at, then, those are ones that we want to help, but we don't limit that. We have other banks that are performing very well, right? They have really strong revenue streams coming in, but they just want something different, right? They're curious to say, is there a different way? Because we're getting our rock star team is getting bogged down by all this compliance stuff, all this administrative stuff, things that, the recruiting, the training of the advisors, the training of the bank staff, those are things that we do as well. And so if they're open to kind of following our formula, then we want to talk to them. Let's have a conversation and just see if it might be a good fit. And it may not be, but let's be transparent, have a conversation, say what's happening, what's going on with your bank, how can we help you? And let's, are you dedicated to putting in the work as well? And if you're dedicated to working the formula and participating, then let's partner.
That's great. One thing you mentioned was performance. How can you tell, what are some indicators of a well-performing investment division versus an underperforming investment division / bank?
Yeah. So that's an interesting question because it's going to be different somewhat for every single bank, but we use kind of some benchmark numbers to look at. And one of the key ones that we can look at to say, not necessarily are they performing good or bad, but are they performing at the level they could be? And so we look at their assets under management, how much they're bringing in with their retail wealth services division compared to their overall bank assets. And one of the numbers that sticks out is they really should be bringing in around $1,800 per $1 million of assets. So if their retail wealth division isn't producing that, then they're underperforming their potential. Now, there's some huge banks that are bringing in lots of revenue, and it's great for their diversifying their non-interest income. But if they're performing below that 1,800 per million, there's room for growth. There's room for optimization. And some of that, like I said, could be because their team's being bogged down by things they shouldn't be. They need to be freed up. They need to be able to meet with clients and not have to worry about some of the things that they're being bogged down with. And that's where we can really help them if they're performing below that level.
Yeah, interesting. Some things like you mentioned having to have a producer be the OSJ and signing off on paperwork that the broker-dealer should be doing anyways, which contributes to part of a full-time employee payroll expense, benefits expense, plus a hard dollar expense to the broker-dealer. Yeah, I agree.
Yeah.
What are some of the things that you see preventing banks from performing at a higher level in their retail wealth management divisions?
It varies, and sometimes it is, again, you've just kind of in this complacency where, your broker dealer maybe is just not bringing solutions to you. They're not bringing extra training. They're not bringing extra resources. And so it's just kind of bogged down. And then honestly, retention is huge right now across all industries. Finding good people, but keeping good people is so hard. And if you say, hey, come work for me, you can be a financial advisor, but oh, by the way, you have to do all of these other things as well that are going to take you away from being a financial advisor where you're going to earn commissions and be able to put food on your table, people are going to say, no, thank you. As a former financial planner, I'd say, no, thank you. Like that is not, I just take away the obstacles and let me do this. Some of the other things that we see is banks that have traditionally just started taking away accounts and moving into their trust departments. So, that's you can't build a successful retail wealth management program if you're going to take things away and move it over to the trust department. It's got to be a really good synergy with the bank, with all areas of the bank, harvesting from your wealth management program into your trust program. Those are some really big ones, I'd say, that are things that we've seen. And again, kind of unrealistic expectations when recruiting. I think that's another one as well. Like we're just going to sit and wait for that unicorn to appear, and then the months tick away, and now you've got nobody in there generating income, generating that. And because you've waited so long for the unicorn when you could have found that person, we've got some amazing advisors in our partner banks that started out with a background in sales completely unrelated, whether it's car sales or pharmaceutical sales or whatever that might be. But they've come in and they have been trained and they're dedicated and they are fantastic. And so if a bank realizes, let's not just let that clock spin waiting for the unicorn. Let's find the right person and let's train them and get them up and running. And then, you've got that person in there working for you hard, and then just get out of their way, right? And let them go.
Yeah, that's awesome. A lot of gems in what you shared today, Ann. Thank you very much for being with us on our podcast. Thank you for being part of the Midwestern Securities team. Again, a lot of gems, a lot of wisdom that people can take away and improve how their banks are operating, and potentially for financial advisor candidates that can improve their career path as well. So if a bank or a financial advisor would like to learn more about this being a fit, working with Midwestern Securities or working with their community bank, community credit union, how would they get a hold of you?
Yeah, absolutely. So any bank, we most closely right now work in the Midwest, but honestly, if it's a community bank, we're licensed in 40 different states. And if they're truly dedicated to wanting to partner and put the hard work in to optimize their program, reach out. My email is Schutt, SCHUTT at MidwesternSecurities.com, and we'll put that in the show notes. Or you can just call our main number, 1-800-732-8601, and just ask for Ann, and they'll connect you over to me, and we can We can probably start with maybe a virtual meeting if you're a far distance away, just to see some basics. But I'd really love to be able to walk in the door and shake your hand at some point if we think it might be a good fit.
Excellent. Thank you again, Ann, and thank you to our listeners for joining. We hope you found it impactful. Please share it with your friends and colleagues, and we'll see you next time on Banking on Growth. Thank you.